Welcome back to Explain the Charts, where we break down the news and chart data to help you make informed trading decisions. Today is October 23rd, 2024, and we're taking a deep dive into Tesla stock, TSLA, to see what's driving its current movement and what the charts are telling us about its future potential. Let's begin by looking at the recent news surrounding Tesla. As you can see from our Google search results, Tesla is set to release its third-quarter earnings report later today. This earnings release is a major catalyst for the stock, as investors are eager to see how Tesla performed in the last quarter and what the future holds for the company. Analysts are particularly focused on Tesla's auto gross margins, as they've been on a downward trend in recent quarters. Investors will also be looking for updates on Tesla's plans for a sub-$30,000 electric vehicle and its robotaxi service, which is expected to launch in Texas and California as early as 2025. The recent Robotaxi Day event, where Tesla unveiled its self-driving cybercab, did not generate the excitement the market had hoped for, leading to some profit-taking and a drop in the stock price. However, Tesla's strong delivery numbers in China and the continued growth of the EV market offer some optimism for the company's future performance. With this news in mind, let's transition to the charts and see how this recent news translates into price action. First, we'll take a look at the daily chart for Tesla. On the daily chart, we can see a clear downtrend in TSLA's price action over the past few months. The stock has been making lower highs and lower lows, indicating bearish momentum. The recent drop following Robotaxi Day reinforces this bearish sentiment. The 200-day moving average, a significant support level, has been breached, further confirming the downtrend. However, it's important to note that the stock has found some support near the $200 level, which could be a potential bounce point for Tesla. Let's zoom in on the last month's candles to get a better idea of the current support and resistance levels. If we look at the last month's data, we see that Tesla has been bouncing between the $200 support level and the $220 resistance level. This range has been holding for several weeks, indicating a potential battleground for buyers and sellers. However, the recent earnings release could break this range and lead to a decisive move in either direction. Now, let's switch gears and look at the 1-hour chart to get a finer-grained view of the recent price action. Zooming in on the last 5 days of trading on the 1-hour chart, we see a clear consolidation pattern with Tesla trading within a relatively narrow range. This range suggests that the market is still undecided about the direction of TSLA's price action in the near term. The recent earnings release could break this range and lead to a more volatile period. If Tesla breaks above the recent $220 resistance level, it could signal a short-term bullish trend. However, if the stock breaks below the $200 support level, it could signal a continuation of the downtrend. Looking at the last 12 hours of trading on the 1-hour chart, we see some interesting patterns that could provide insights into TSLA's immediate future. The recent price action suggests a potential bullish divergence, as the price has been making lower lows while the RSI has been making higher lows. This divergence could be a signal that the downtrend is losing momentum and a bounce is possible. However, it's important to remember that bullish divergence is not a guaranteed signal of a reversal, and it's crucial to consider other factors before making trading decisions. Finally, let's take a look at the 15-minute chart for Tesla to examine the most recent price action. Zooming in on the last 12 hours of trading, we see a more volatile pattern with Tesla making rapid swings in both directions. This volatility is likely due to the upcoming earnings release, as traders try to anticipate the outcome. The recent price action suggests that Tesla is finding some support around the $217 level. However, the stock has struggled to break above the $219 resistance level, indicating that the bulls are facing some resistance. Overall, the 15-minute chart shows a tight range with a slight bearish bias. The earnings release could provide the catalyst for a breakout in either direction. Now, let's summarize the key price levels to watch out for in Tesla stock. The $200 level appears to be a significant support level, as the stock has bounced off this level several times in recent weeks. A break below this level could signal a continuation of the downtrend. The $220 level appears to be a significant resistance level, as the stock has struggled to break above this level for several weeks. A break above this level could signal a short-term bullish trend. In conclusion, Tesla stock, TSLA, is facing a crucial period as its third-quarter earnings report is due out later today. The recent news surrounding Tesla suggests a mixed outlook for the company, with concerns about auto margins and the lackluster reception of the Robotaxi Day event, but optimism driven by strong deliveries in China and the continued growth of the EV market. The daily chart indicates a downtrend, while the one-hour chart shows a consolidation pattern with a potential bullish divergence. The 15-minute chart reveals a tight range with a slight bearish bias. The key price levels to watch are the $200 support level and the $220 resistance level. A break below the $200 level could signal a continuation of the downtrend, while a break above the $220 level could signal a short-term bullish trend. The earnings release is likely to be the catalyst for a breakout in either direction, so traders and investors should pay close attention to the announcement and subsequent price action. We recommend doing your own research and consulting with a financial professional before making any trading or investment decisions. Thanks for watching, and remember to subscribe to Explain the Charts for more in-depth analysis of the markets. Until next time, happy trading!